Hi everyone, the negative news flow really hasn't changed over the past week, but that doesn't seem to bother sentiment on Wall Street much. Overall, markets are clearly under pressure, upward pressure. We've seen fresh record highs, but there's still one asset class that just won't get going, and unfortunately that's Bitcoin and altcoins. What's coming up this week from the Fed to US earnings and chart analysis, I'll go over in the next few minutes with Oliver Michel from tokentus. Great to have you here, Oliver.
Hi.
The NASDAQ keeps printing new all-time highs and just won't slow down, while Bitcoin and the alts are doing basically nothing. How do you explain that?
Yeah, if altcoins and Bitcoin had performed as well as the US indexes, we'd probably be smiling a lot more right now. But basically, Johanna, the NASDAQ and the rest are posting one all-time high after another. It's pure hype. There'll probably be a correction pretty soon, but after that comes the run toward the final all-time highs. And I'm assuming our coins will start to follow that move and get a bit swept up in the hype, coming from the US indexes. Then the real question is how far up they'll get pulled. We'll see, but one thing is already pretty clear to me, and that's the timing. We don't have much time for this whole move up because, and that's the key point, the US indexes are already pretty far along and they just don't leave the coins much time to run. 2, 3, 4 months.
We'll get back to the timing and the catch-up potential Bitcoin and altcoins still need to deliver later in the show. But the time factor, or let's call it the expiration date, will matter for the next topic too, because tomorrow is the Federal Reserve's final meeting with Jerome Powell in charge. His successor, Kevin Warsh, we've talked about him a few times already. Including on our Crypto Insights channel, that could actually change quite a bit in terms of how the Fed approaches policy. But when you look at the Fed Watch tool, meaning what the market expects from the Fed, there's still no shift. In other words, rates aren't getting pushed any lower.
Yeah, exactly. So this is the readout from the Fed Watch tool from this morning. You can see it pretty clearly. Everything stays at the current rate. And Jerome Powell has 100% backing for his last meeting if he does nothing today. And that's basically what everyone expects. What's interesting is, compared to last time, something changed here on 0915, and it was 50 basis points right away. I thought that was interesting, that's why I pulled it up that far. But overall, like you said, once Kevin Warsh comes in as the new Fed chair, a lot will probably change. We broke that down on the channel. He thinks AI can boost productivity, bring prices down, and cool inflation. And if inflation comes down, you don't have to fight it with high interest rates anymore. You can basically cut rates, and that's exactly what we want to support the economy. So, we'll see if he can convince the other members on the FOMC board, and I'm really curious how the next meetings will shake out.
Bottom line, for the last 3 weeks, it's been all about the central bank and, of course, the new central bank chief, Kevin Warsh. Last week, we already had his hearing in the Senate Banking Committee, and it keeps going this week too. And next week, we're expecting some more details, maybe even a few signals from Kevin Warsh. Like what?
Yeah, he's not really going to be setting any direction yet, but like you said, his hearing in the Senate Banking Committee was on the 21st, so basically exactly a week ago. And it looks like the committee is going to vote tomorrow, Wednesday, on whether to send him on to the final Senate vote. And then tomorrow, Wednesday, we've got the FOMC rate meeting. And the decision, like you said, that'll be the last meeting Jerome Powell will lead as Fed chair. His term as Fed chair ends on 5/15. Theoretically, if he wants, he can stay on the board for another 2 years. Whether he does or not, we'll have to see. There was a Fed chair who did that before.
I can't really picture it.
Yeah, it's definitely possible, he says. I'm staying to keep influence on the board, to keep my rate policy. keep it going. But the assumption is Kevin Warsh will be fully confirmed by the Senate before May 15th, maybe even as soon as next week. Voted in. And yeah, Johanna, what you have to be clear about is we're talking about the Fed chair. And when you ask yourself, what are the most important posts in global politics? The Fed chair we're talking about here isn't someone you just swap out, like you take Kevin Warsh and he replaces Jerome Powell. This is one of the most important jobs worldwide because the US is the #1 capital market and he's at the top of it. That's why this matters to all of us, globally. It's a pretty far-reaching call they've made with Kevin Warsh and his views on all the stuff, inflation, AI, cutting the balance sheet. He'll definitely run a different line. Whether he can get the board to come along, we'll see.
Exactly. He's not the one and only boss of the Fed, but a fresh face does bring new momentum and maybe a turn or two in Fed policy. We've still got a lot on the calendar this week. For one, we're right in the middle of earnings season. This week it really ramps up. So far, Q1 numbers have mostly come in better than people feared, even with those dark clouds overhead. And this week is key, because 5 of the Magnificent 7 in tech are opening the books on Q1. Microsoft, Amazon, Meta and Google tomorrow, Wednesday, then Apple on Thursday. And mid-May on the 20th, the big evening show kicks off again with Nvidia. We already touched on this before the interview. Tesla's put out numbers that were partly better than expected. That obviously gives the market a bit of a boost, especially around the Mag 7, where everyone keeps saying they can't keep this pace forever. And if the whole thing turns, we also talked about stock concentration, how the hype is sitting on just a handful of names. If that breaks, the broader market can turn pretty fast too. For now, at least, the analyst shops still look fairly upbeat.
Yeah, we've got stock concentration as a risk, and we've also got a theme concentration, basically all on AI. Mm-hmm. And anytime things are that concentrated, like when the ship's got only a few watertight compartments, it can go down pretty quickly. And it's worth noting the Mag 7 are all in the NASDAQ and all in the S&P, while only Microsoft and Apple are in the Dow. So the numbers coming out will mainly move the NASDAQ and the S&P.
And looking ahead, maybe not quite as much as lately, but this week's economic data will still feed into where things go next. What's coming up?
Yeah, we have this Thursday. We get US Q1 GDP. We already chewed through the Q4 story from the first read to the second and the third, so it's
all the way down.
Yeah, exactly. We followed it all the way down. We might see some interesting numbers come out here. Of course, you'd hope everything's fine. But if the numbers are bad, it'll confirm a lot of what we already predicted. Even so, like we saw with the first read, with Q4, you can't read too much into the first read. The second read ended up being cut in half, which you hardly ever see. And next Thursday, we'll also get the PCE inflation data for March. So that'll be interesting too. But Kevin Warsh already said he'll keep using that kind of data, but more and more he wants to lean on fresher numbers for what the board bases its decision on. So yeah, interesting data that could basically confirm what the US market looks like right now. And it'll be interesting to watch, but it definitely won't affect this at all for now. Yeah, and maybe we'll see a couple new developments in the US-Iran conflict too. It's about the nuclear program. That's controversial, and maybe they'll move closer, but right now, compared to 2, 3, 4 weeks ago when every other post on X was about that exact topic, it's right now totally second or third priority. So yeah, it's been pushed to the back burner. I think Americans are shifting more and more back to domestic issues because the midterms are in November and November isn't that far away.
So for now, we've got summer ahead of us, but you're right. The whole thing has kind of ground to a halt because people are now expecting the US, for example, to come up with a possible peace plan, a counter proposal for Iran. They weren't happy with what was on the table, so it's dragging on longer and getting tougher than anyone expected these past few weeks. And even with this, anything but positive overall situation, US indexes just keep climbing. The NASDAQ set new records on 4 out of 5 days last week. Yesterday it hit another all-time high, and the big question is, how long can this keep working? Then again, people have been asking that for years.
Yeah, that's really the big question. How long can this keep going? This green arrow basically shows the move, starting back in 2001. Since 2001, the NASDAQ has been trending steadily higher. And even in 2007, 2008, when we had the financial crisis, the NASDAQ did get hit, but not nearly as hard as the other indexes. One thing and another, a move this steep like we've got here, you really haven't seen in the last 25, 26 years, unless it was a real V-shaped recovery. But this isn't a V-shape, it's just a normal move. So yeah, I think, and I've been saying this for weeks, months, even years, we're slowly getting to the end of the road here, and the big trend is in place. We had one last big correction, about 10%, then we pushed higher and worked it off. The 1 and the 0, like we always see, we ran right through the retracements, and that was a key point. Cut through them like a hot knife through butter, straight up. Clear signal. The trend that came in here is continuing, and that's exactly what happened. We met on that vertical line last Tuesday, and since then it's basically been nothing but all-time highs seen. And yeah, obviously, listen, it can't just keep going like this forever. Our big target we called years ago, 27,000, got cleared last night at 27,300. So over that whole long run, we were pretty much spot on. And yeah, obviously this can't keep going forever. We'll get a small pullback. You can see it down here on the RSI too. It's overbought, drifting sideways up top. And it's really just a matter of time before that little correction hits. Someone in the comments wrote, he's always talking about corrections. Yeah, but you've got to separate big corrections from the smaller ones we might see here first, before we then push to a final all-time high. Because nothing moves in a straight line, up or down. It always goes in these zigzag moves, and with how far we've come now, plus a correction that'll probably happen, we definitely have to adjust the target zone. And yeah, I can totally see that if we tag 28,000, maybe we'll see 29 too. And traders always have this thing for round numbers. So I can imagine a bunch of firms have bets on whether we crack 30,000 and then do everything they can to get it there. So I think somewhere between 27 and 30,000 is where that final all-time high and that last little stretch sits. Up to the peak, we're actually in a pretty good spot. Before I start assuming, we're heading into the big rollover.
When you say small corrections here, you already said we hit the target zone and we're about 300 points above it right now. What makes you think there's still a small pullback coming and then more final all-time highs? Or maybe it's not even a correction, it's just directly a move to keep the momentum going. So how do I tell a small pullback from a full-on drop after that huge run-up?
So if you look at the RSI here, you can see it's overbought, so odds are we'll get a pullback in the chart. Very, very likely. And then you get something like this here. What used to be resistance then turns into support. So it could totally happen that we drop from here down to the last all-time high and then kick off another run from there. And that's basically because of what I always say, liquidity is flowing into the market right now. A crazy amount of money, including foreign money, is flowing back into the US market. And the moment that happens, it naturally keeps pushing higher, and I'm assuming that the Fed, since it's dumping massive money into the market, will make sure, especially tech names like we've seen, and the Russell, like we'll look at in a second, get juiced again. But money alone, a country's M2 by itself, isn't a reason for that. Even if it keeps rising non-stop, it doesn't mean automatically stocks, companies, and the indices go up with it. At some point it breaks, and I think that's what's going to happen. We'll probably get one more leg up together. M2 and the indices, and then M2 likely keeps climbing while the indices break down. The bubble will pop across the board. Stock concentration will blow up. And the AI theme concentration too. This can't keep going forever.
We just touched on the fact that 5 of the Magnificent 7 are reporting Q1 earnings this week. What kind of impact do you think that'll have on the tech-heavy NASDAQ?
Yeah, that's definitely going to move things. And it could even be the trigger for this correction. Sell on good news. If they all post strong numbers, I can see us popping a bit higher first. Then it's sell on good news and we get the correction. And if the news is bad, we drop anyway. So either way, right now everything points to a correction that can land on a support level like this one. And then we'll make the last final push up to somewhere between $27,000 and $30,000, and that'll be it. Just my personal opinion.
Let's also look at the Russell 2000. That's a gauge of market breadth, and it's more about smaller companies, so naturally more risk. We saw the Russell also print all-time highs last week, and then it got a bit quieter.
Yeah, at least there wasn't any negative news, which is already a good sign. Yeah, you can see the Russell made its move up here too. It pushed through those retracement levels like we wanted. The battle at the retracement, like we called it, is over and we won. And the Russell set a new all-time high exactly a week ago. And since then, it's been moving sideways. We set a target of 2,800 points a while back, and right now we're at 2,792, basically right under the dashed 2,800 line. So that target is pretty much hit almost to the point. Yeah, if the US indexes and stocks are pulling back, then the Russell pulls back too, and there are a few support zones here it can drop to before it makes another push higher. But the thing is, this is the move we've been waiting for, because it proves, like we said last week, liquidity doesn't hit the really hot names first, like the Magnificent 7 and the AI stocks. The way that pyramid idea suggests, it kind of trickles down, and at some point it shows up in the broader market too. You can see it right here. So yeah, we stay in the uptrend, move along, do a small pullback, and overall that's a pretty solid signal for our crypto. But same thing here. Joanna, the target area, now that as of today, April 28th, we've basically already hit our target, so we need to adjust the target range. And here too, I'd say anywhere between 2,800 and 3,000 points. That's where we're headed. I'll mark that up here in the green area for next week. So a final all-time high between 27,000 and 30,000 on the NASDAQ, or 2,800 to 3,000 on the
Russell.
The Russell, but I think even with all the positive vibes, much beyond that,
It's not going to happen.
it's not going to go any further, in my personal opinion.
Today we covered the Russell and the NASDAQ, not the Dow Jones and not the S&P 500. Those two are pretty much in line with them, right?
Yeah, the Dow's pulled back a bit. It's already kind of in an early correction, so it's made the kind of move we were expecting. The S&P is basically moving in sync with the NASDAQ. And it printed an all-time high last week and again yesterday, so there's not much between them. All right, but we're not here to do a full-on US index breakdown. Still, if you're holding US stocks, it's worth thinking about whether you buy this move and the rollover and maybe get out up top, or at least trim the position a bit and take some cash off the table. What I'm trying to do in this interview series is not only look at coins and coin charts. Coins are just a small piece of a huge capital market. And that huge market is driven by these 4 indices, and South Korea hit an all-time high today too. Yeah, so you're seeing big moves everywhere, and you have to view the coins within that context. You have to view the coins within that context. You can't look at them in isolation.
So only once you really get the big picture, can you carry that over to coins and where they might go? And that's exactly where we're headed now. Because as great as this looks, Bitcoin and the rest are kinda underwhelming. Bitcoin's been asleep for 82 days now, basically stuck going sideways. And slowly you start getting impatient. It's this mix of impatience and like nothing's gonna happen anyway. But those are usually the phases where, I don't want to say you let it slip, but it fades into the background and then something happens pretty quickly, right?
Well, we already said most of the action is sideways when you look at a yearly chart, and you kind of have to live with that. 82 days, like you said, from here to today, compared to the 69 we had before, that's a clear extension. It's a sideways range, no question. It's tilting upward, and it looks pretty similar to this part here. So yeah, since we don't know what happens next, whether it goes up, down, how the down move looks, and if it drops, how it moves back up, there are a lot of open questions. You're naturally a bit impatient about when it finally decides. But at some point, Johanna, I can guarantee it'll decide. And then everyone's smarter after the fact. But quick recap, it's April 28th today. We're still ranging 82 days in. The point is to form a base down here. We talked about that. Is this the base forming here, and do we head higher after that? And the big question is, does our Bitcoin/altcoin market follow the US indexes, like I keep saying, meaning whatever the US indexes do, driven by liquidity, eventually plays out here too, with a small time lag? Bitcoin and the altcoins?
So is the basing process finished now?
I don't know either. No, we've seen 60,000 here, and there are 2 options. One is we dip again, US escalation with Iran, and maybe the NASDAQ sells off hard on the numbers coming out. Tomorrow and the day after, then we could drop again down to 60,000 at most. So from where we are now up to 60,000. And if we get a really huge move, like a final capitulation, it could totally dip back into the high 50s, like we always say. But then you'd assume the bottom's in before it heads back up.
So what do you think is more likely right now?
It could also be that 76,000, which was resistance here, now turns into support, and we just keep moving up from here. Honestly, I don't really care either way. I'm invested. I'm in. I'm fine with the straight shot up just as much as going up from here. As long as it goes up and we get into a relief rally, sure, the further we drop, the more that whole move up shifts out to the right, that's obvious. But I still think, in my view, we're at least headed into a relief rally that'll hit those 3 big retracements. And if we're lucky and the momentum is really strong, then yeah, we push higher into a continuation rally.
Let's look at Bitcoin again, not just on the daily, but on the weekly too. In the past, we always brought in indicators like MACD and RSI. They've been pretty positive lately. Does that stay that way?
Yeah, they were really positive, which is why we're keeping them in. I put both of them stacked under the weekly chart. And here you can see the RSI, on the short-term move is above the trend line we drew. And that kind of shows we're already getting a nice move up, and the MACD has flipped too, now with the third bar in the green. So yeah, our weekly chart is showing some strength. RSI and MACD giving positive signals points to a bottom forming, whatever that ends up looking like. And the second you say on the weekly chart, we might drop back to the 60s or maybe the high 50s. The whole thing looks a lot friendlier because the downside here is pretty small in this view. There's another scenario I want to bring up real quick because we'll need it again at the end if this here was the start.
Mm-hmm.
Yeah. In October 22, we hit the low, and that's the whole bull run up to this high.
Mm-hmm.
Then there's also the idea of 3 years up and 1 year down. So there are people who say, yeah, this is the move down now, and it could be a pretty big one. And then basically from here, the next cycle starts with 3 years. So it could totally be that we maybe, like some people think, we drop to maybe $30,000–$35,000. But then the bear market after the bull is basically over and we head back up into a bull market, you wrap up that cycle and roll into a new one. That's possible too. I'm not going to rule it out because basically anything can happen, but I think this version is pretty unlikely.
Mm-hmm. Like we said when we were lining up the interview, we're going to focus today or these days mainly on chart analysis because with all the back and forth in the fundamentals right now, you can still spot a point or two. Not saying it's something you can cling to, but it can give you a few pointers. Still, let's also take a closer look at the Bitcoin fundamentals. What's happened over the past week?
Yeah, that's a really good point. These days, the charts are front and center because it's really about how Bitcoin's moving since everyone's watching their portfolio. After being down 52%, they're thinking, okay, how does my portfolio bounce back? Last year and the year before, we had way more news to cover in these interviews, but we also had the Biden administration with Gary Gensler, with Elizabeth Warren, with the lawsuit against Ripple and a bunch of other cases. You basically had to talk about all those side issues. That's not really the case anymore because in every key position you've got crypto-friendly people, and our Kevin Wersch too, we even listed his holdings on our channel.
Yeah.
And he's got tons of crypto and stakes in crypto companies. So up top you're going to have a crypto-friendly SEC Fed chair. So yeah, right now there isn't much news to digest. The main thing you can pass along is Satoshi bought another 255 million last week. We've had 3 straight weeks of only positive inflows at BlackRock, which for us is a really strong signal when they're buying. When wealth managers tell their clients like, hey, buy some Bitcoin, put it in your portfolio, you know, BlackRock's backing it. And what's pretty interesting right now is from April 27th to 29, that's the biggest Bitcoin conference. There's obviously tons of news, and more than anything, lots of S-meaning statements. Meaning you'll actually have people on stage like the SEC chair saying crypto matters, and other folks who, like we do, are out there pushing the crypto topic and saying this is definitely where things are headed. And the US government is fully behind it, and one of the senior officials said that within the next few weeks they'll also share some really important info about the strategic reserve. You can believe it or not, we'll have to wait and see when it drops. But overall, the sentiment is really positive, and it could absolutely be that this move here ends up showing up in the price.
We're still looking at the altcoins too, even though, to put it bluntly, if Bitcoin can't get moving, then Ethereum and XRP probably won't either. Still, it's interesting to see how they've done lately.
Same as Bitcoin. this is basically just proof of concept that both of them follow Bitcoin, with ETH tracking it more than XRP. And you can see the move down here, kind of drifting sideways lower. And this is the weekly chart of both coins. So here you've got ETH. Like I said a second ago, Bitcoin's corrected about 52%. ETH from up here down to the low was 65%. Right now, Ethereum's sliding back into our old range, which is over 2 years old now. That's the green zone. So if you look at this and ask, what's ETH been doing the last 2.5 years? You kind of have to say it's been bouncing between 4,500 and 2,300 in that zone. A bit down, a bit up, back down, but basically it stayed in there. So not a whole lot changed. But we'll see how this final pop, like I said at the start, how the US indexes can pull crypto along. If we get a relief rally in Bitcoin, then I think ETH will for sure retest its old all-time high at 4,068. So basically just under 5,000. And same thing for XRP. If we get that relief rally, we head for the last all-time high around 350. If it turns into a continuation rally, then yeah, we'll push past that too. But you can see the different setup here. With XRP, we've got a clearly weaker move. And you can also see the RSI is still nowhere near as high. And the histogram hasn't really built up that much yet. Yeah, it's starting to go green, but not super strong. But that's typical for XRP. XRP is weak and slow until it suddenly breaks out big, and XRP corrected 70%.
Cool.
So yeah, those are some solid numbers we've all taken along the way. The ones we haven't cashed out up here. And I think based on what I just described, we've pretty much hit the bottom on the downside. A base is definitely in sight, and it'd be totally stupid now to get out.
Like I said earlier, if there's not much upward pressure on Bitcoin, altcoins usually don't keep pushing higher either. And we also talked on our Crypto Insights channel about Bitcoin dominance climbing back above 60% these days. That basically pushes an altcoin rally further out for now.
Yeah, it's back above 60. Makes sense if Bitcoin's market cap is moving in step with the alts, then it naturally grows more than proportionally. And that's why it's now had 4 green weeks in a row on the way up past 60%. In my view, that doesn't really mean much. It's still a big sideways move that's just edging up a bit. But overall, it's that ramp up. US indexes, Bitcoin, altcoins, and altcoins are the last to really get going. But then even more so, because like I keep saying, the market cap is smaller, so less money can still mean a pretty good move. And that's what I'm expecting here, too. So nothing unusual to see here right now. Everything is broadly moving together, basically as expected. What'll really matter is what Bitcoin does now at the end of this sideways phase and how it actually wraps up.
We've got the roadmap with us again this week. Lately we haven't exactly ignored it, but there just hasn't been much changing, and honestly, there still isn't much new on the roadmap these days or on your colorful paint splatters, but we're still bringing it up so you've got it in your head where we're at, where we're headed, and what could be coming up next.
Yeah, what did I change? April 28th, I changed the date. I did kind of threaten to turn half of the final part green because I think we've already covered a good chunk of that last stretch toward the final targets in the big US indexes. You can see there isn't much yellow left, not a whole lot still to hit. The final targets, those are what we're going for after the correction. So you can basically check off this first big block here as green. If back then I treated the Dow the same way as the NASDAQ, S&P, and Russell, that would be green too. We were really solid over a long stretch. In the second block, we were also in a great spot on Bitcoin's path up toward 126. We called that 1 for 1. After that, we maybe got a little greedy. I got a little greedy, and I expected a higher low, like a small pullback, a correction, and then similar to the US indexes that pushed higher. I figured Bitcoin and the altcoins should have pushed up too. But they didn't. They fell back to right around 60,000. Still, I personally still think we'll get a continuation rally. Odds-wise, it's definitely one of the less likely outcomes. But that's my view. I still think we'll see a dominance rollover. Meaning, yeah, Bitcoin goes up. For sure we get a relief rally, and maybe, if I'm right, even a continuation rally if FOMO really drives it. And ahead of the midterms, a ton of money gets pumped back into the market, the US indexes, hype things up, drag Bitcoin along, and then at some point Bitcoin hands the flag off to the altcoins. And then it's basically Ethereum, XRP, Solana, ADA, and the like that carry it to the finish. What I marked in green is just, I have then, if you're already set on October 6th, being the top and that we're in a bear market right now, okay, then I'll write it in here that way too. I said Bitcoin would drop 60%, and at 52% we're not that far off. I also mentioned the percentages for ETH and XRP, so yeah, same thing. There. When you talk corrections, bear market type moves. I still can't really accept that this is a bear market. I see it more as a midterm correction, whatever. Yeah, and then you're talking about those kinds of numbers. I remember people asking, do you really think Bitcoin can drop 60, 70%? Yeah, we've only dropped 52% so far. And if it pushes into the high 50s, as a final capitulation before it heads back up, then we're right in that zone. So on that, we called it pretty well. Of course, our model portfolio took a hit. That's the one we set up when we kicked off our interview series back in June 23. A super defensive, super simple portfolio, which made total sense at the start of the series. 50% Bitcoin, 25 Ethereum, 25 XRP. Right now we're up 143%. And because we've held it over a year here in Germany, it's totally tax-free. Since I think 3 weeks ago was the last time we laid out the roadmap. We were at 121% then, so we've gained about 20% in 3 weeks. At the peak, this model portfolio was up 341% tax-free.
So this is your plan you're showing us here. And it's not investment advice, meaning you're sticking to that plan and adjusting your moves and allocations accordingly.
It's getting harder and harder to adjust this because we can't forget the document is dated May 27th. And on May 27th, we said, let's sum up everything we've said over the last year. So basically, this thing is from mid-2024. These statements here and there are a ton of them.
No bragging, Oliver.
Green.
No bragging. Oh, but of course it's still your roadmap. I want to circle back to what we said at the start. The US indexes keep pushing to new all-time highs, and there doesn't seem to be any stopping them right now. That means there's still a lot of catching up if Bitcoin and altcoins are supposed to follow. And by now it kind of feels like time-wise that window is getting pretty tight, like you've got to hit the gas, right, to jump on and catch this move that's coming from the US indexes.
Yeah, absolutely, Joanna, exactly. Like I said earlier, I'm not going to be talked out of the fact that these coins are basically a first or second derivative of the big US indices, simply because they're connected through liquidity. Liquidity drives everything, and the big US indices set the pace And on April 14th, so 2 weeks ago, we had a slide up at the very end that said the US indices are in the retracements. The battle over the retracements, are we going to get through it? When the decision hits, it's either trend continuation or a rollover, a straight rollover from there, like you mentioned earlier. What we know now, 2 weeks later, is it turned into a trend continuation. We pushed through the retracements and printed new all-time highs. So you can rule out a direct rollover here. That means the big US indices, the ones that set the tempo, pull in liquidity and also dump LI liquidity again when they're hurting and a rollover happens, they've made their call. And the steep way these charts are moving tells me we're heading into a parabolic, hypey final phase. This isn't a smooth, steady grind up. It's got that hype feel, and the numbers could light it up again this week. So they've made their move, and like in chess, when you hit the clock, now it's the other side's turn, meaning the coins. And for the coins, on April 14th, we wrote, Bitcoin is moving sideways. And the call at the end of that range is a relief rally, it goes up. Or it shoots straight back up, or we've got a bear flag, meaning it dips again into the high 50s and then maybe turns back up for a relief rally. Or, and I hinted at this earlier, if we really are in a bear market at the end of a Bitcoin cycle, then a new bull market would kick off pretty soon after. That's the third option we shouldn't ignore. So yeah, a big Bitcoin decision is coming. 82 days going sideways. And all I could think of was that line, the calm before the storm. And if that saying ever fits, it's now. Because at the end of this sideways chop, we could absolutely see a huge move down, like I've said a few times, a final capitulation.
Yeah.
Where it drops to 58. Some people might be right with that setup. It goes even lower, and then a new cycle starts with a bull market. Or we get a relief rally right away, and not only after it tags the high 50s, a relief rally. Why? A massive push-up, a total short squeeze, because right now there are tons of shorts stacking up above 67. And the moment those shorts get wiped out and a real squeeze hits, we're pretty quickly at 85, 90, 95, and then FOMO kicks in instantly and everybody wants back in. And maybe the Clarity Act adds fuel too. The one that hopefully gets pushed through the Senate in May. And then we won't just get a relief rally, we could also get a continuation rally, but that call, Johanna, is still up in the air and we've got to wait. Once we get the first signs of which way it's heading, we already looked at two indicators, RSI and MACD on the Bitcoin weekly. It all looks pretty good, but that's kind of like what we've got as the thumbnail on today's video. Nothing's decided here yet. We're not out of the woods. We've got a lean, yeah, but it could still go a totally different way. My take is we'll do this here or maybe take the move down. But after that, this is what would follow. This part, I don't know. There are people saying it could go like that. I can't really get behind that right now. But basically, that's what fits these days. We've been sitting here for 82 days now talking about this sideways action, trying to pull some kind of info out of thin air so we've got something to show. So yeah, it's really calm right now, and the storm's coming. And at the end of this sideways move, we'll get a storm, either up or down.
And you just said, well, Johanna, 82 days sideways isn't a big deal, but you're still a little antsy about the breakout, right?
Yeah, if I'm saying something huge is going to happen in the next 3-4 months, then of course I'm sitting here all fidgety like when is it going to happen? And the sooner I can show you this move up here, the better.
Oliver, that impatience should pay off soon, hopefully with a breakout to the upside, not the downside. Still, we covered all the key stuff as always this Tuesday, and a big thanks for today.
Sure.
By next Tuesday at the latest, folks, we'll have more news for you. You just saw it. Economic data's on the calendar. 5 of the Mag 7 have earnings coming up. Plus, we've got the Fed meeting, and as always, we'll have everything you need right here. See you next week.